if you're doing a home equity line of credit, this would be good too. Like a home equity line of credit and a life insurance policy loan. They're both assets with equity in it. Even if you do get one from Northwestern Mutual or whatever, you're still, even if it's an 8% policy loan, it's still better. And the biggest problem is that we print all the money. Inflation's the biggest problem, and inflation is because we print money.
You used life insurance to pay for a wedding?
I did. I used my policy to pay for our wedding.
Can you explain that?
Yeah, I mean, you can use the money in a life insurance policy to do anything. My intention is to make what we do as close to the real bank as possible. The whole idea is to recapture the interest payments for what you finance in your life.
I find that the easiest way to explain what we do here is to compare it to real estate. I come from real estate. You are teaching me insurance, and I just keep thinking about a life insurance policy as a home that you're building equity in.
Understood.
And then when you go to leverage a home, it's not like they take your home. The home's still there.
Yeah.
It's like that.
You're right. Yeah, I mean, we did a little training on it this morning. In a home equity line of credit, if you're doing a home equity line of credit, this would be good too. Like a home equity line of credit and a life insurance policy loan. They're both assets with equity in it, right? The home has equity, the policy has cash value. You can borrow against 70% of your home, right?
Just about that.
70. Yeah. And you can borrow 95% of your cash value. A HELOC is going to be 7 to 15%, depending on your credit score.
7 to 9 in today's market.
But like I talked to a guy that has a 13% HELOC and he just didn't have good credit. Yeah.
Yeah, so you don't control.
Yeah.
You don't know what you're getting yourself into before you get into it.
Yeah, I mean a policy loan, even if you do get one from Northwestern Mutual or whatever, you're still, even if it's an 8% policy loan, it's still better. Right? Like, but One America is 5.02%. Meritas, Security Mutual, they're all under 6.25%. Right? I believe Security Mutual is 6.2. Right? Penn Mutual is a little higher, but you wanna, it doesn't matter. It's still a lower policy loan rate, and then you also have to pay every single month on a HELOC. You should pay every single month on a policy loan, but you don't have to. Here, your collateral is your house that you live in, so if you don't pay it, you lose your home, and you're homeless. And here, your collateral is your life insurance policy, which by the way that it's structured is going to have a ginormous death benefit, and you're leveraging something that, worst case scenario, you could pay out of your death benefit when you die. They're both technically infinite banking. Like Nelson talks about that. They're both infinite banking. But the whole life insurance has the best terms or conditions for greater leverage. But technically, a HELOC would be a form of infinite banking.
When I speak to people, well, all the wealthiest people that I know keep no money in their bank account. They're always buying real estate. They're keeping their money in a brokerage account, whatever it may be. You could leverage real estate. Exactly. You could leverage a brokerage account. You could leverage a 401k. When you leverage all of those assets, you're going to be charged interest. You're going to be put on some sort of a schedule.
Yeah, okay.
So you're going to be forced to pay monthly.
You do.
And additionally, it's a higher interest rate than using life insurance.
It is. There are some self-directed IRAs that could have a lower rate, but then you're
adding risk.
And
you're adding risk into the equation.
You're right. And the other thing is that they'll be tax deferred instead of tax free. So Nelson discovered that the best vehicle for it is life insurance. And I don't care about it. Like if it happened to be that you could leverage against a notebook the same way, then I would go sell notebooks. The reason I do this is because it's a major problem in America is financing, and that we finance everything that we buy. And the biggest problem is that we print all the money. Inflation's the biggest problem, and inflation is because we print money and the way that we do. And the way to take advantage of the fact that we print so much money is to buy appreciating real estate like multifamily, where rents are always going to go up and the prices are based on rental income, not comparisons, and that you can actually utilize, that you can leverage against tax-free. So you don't have to pay taxes, and you don't have to worry about inflation, which are the two biggest problems that we have in America with our money.
People can't stop spending money that they don't have.
Yeah.
So you used life insurance to pay for a wedding?
I did. I used my policy to pay for our wedding.
First, congratulations on the wedding. Second, can you explain that?
Yeah, I mean, you can use the money in a life insurance policy to do anything.
So it doesn't have to be for investments or anything like that?
No, you don't have to. When you get like an SBA loan, you have to submit a business plan. When you use money from the bank, you should use it for your business. But for a life insurance policy, it's really just leveraging current assets that you have, the current cash that you have, and being able to use it for whatever. So, yeah, I've used it for my wedding. I've used it for marketing campaigns. I've used it to hire Rosalinda. I've used it for a lot of things. And I'm just constantly taking my money, putting it into my policy, and then borrowing against it to make sure that we can operate our lives and businesses better. It creates leverage.
Okay. So the entire process of doing the wedding, how much did you put in? How much did you take out?
Well, technically, I didn't use the policy directly for the wedding. I put everything for the wedding on my credit card. And then I took all my income and put it in the policy. And then I borrowed out from my policy to pay my credit card. And the 30 or, I didn't add it up because I don't need to worry about it, but 30 to 40 grand it ended up being was all on the credit card. And so then I'll borrow cash from the policy to pay off the credit card. And then I also get points for paying off the credit card. And then we can go to Vegas for Grant Cardone's event for free.
Okay. So you get points from using the credit cards.
Yeah.
You get dividends from using the life insurance.
Uh-huh.
And then you get married from the money from the life insurance company. And at the end of the day, you're making dividends, you're making points, and you have an outstanding policy loan, right?
I do have an outstanding policy loan. Yeah.
Okay.
I have a $96,000 outstanding policy loan as of this morning.
And how do you have to pay that off? How does that work?
I don't pay it off every month on a schedule. I did that last year, but this year we're in a big growth phase, and I used $72,000 of that $96,000 to put down for a new office, and that bought me some time. And so I'd rather, for right now, because I have the freedom and flexibility of using a policy loan, I should, and I usually do, pay it back on a fixed amount, like on a schedule, but didn't do that this time. So I'm just going to wait until we grow our business a little bit and then be able to pay that off. Yeah.
Cool.
Yeah.
Cool. And the cash value part of it, that's just completely separate from the death benefit.
Yeah, you're not leveraging against the death benefit. I have a $10 million policy. I actually have 3 policies that add up to $10 million. Because I started off with $9 million in term and $1 million in whole life. And I've now converted $1 million twice because I hit my limit of how much cash I can put in. So it allowed me to have more cash. Yeah.
Cool.
Yeah. But I don't want to pay for anything directly. So I get all my money and I put it over there in a policy. And this is what's going on in my head. Is I make all this money and I put it over here. And it's stashed over there. And it just keeps building. Like, just imagine like a pile of money. And then you go get more and you add it to the pile. Like you're raking leaves. And you put it over there. And it's adding and adding and adding and adding and adding. And that's all over here. But then the life insurance company says, hey, because you have this pile over here, we'll give you cash as leverage. And you can still grow your pile over here, but you can leverage 95% of it to go use for your day-to-day expenses or your business or whatever you do. Yeah. That's what I think about. And so I'm just always putting it over there to the side. It's just building more and more and more and more and bigger and bigger and bigger and bigger until the pile gets too big and then it's going to start falling. So I got to get another pile start.
Okay. Fair enough.
That's my mindset.
Cool.
Yeah.
So he's gonna love this. Nice.
Yeah.
Sweet. Cool.
That really is my mindset.
Yeah, like a lot of people think that what we do requires them to take $300,000 and put it into a policy right up front. And they're missing the whole point because these people don't have $300,000 to put it in up front.
Yes. No.
And getting a policy sooner rather than later is probably the quickest way to get $300,000.
Yeah, but ideally, yes, but like the reality is, I think the biggest thing that it's not really possible today, but that my intention is with this is to make what we do as close to the real bank as possible. Like the concept of infinite banking is not just to get a life insurance policy and put some money in it and let it grow. That's not at all what it's for. It's for the whole idea is to recapture the interest payments for what you finance in your life. And today, like credit is so much bigger today than it's ever been that we basically finance everything in our life. And before, Nelson Nash was talking about like the major purchase of your life, but then he expands in a whole chapter on expanding the system to include all of your income. And so that's that one, it's literally a page and a half. That is what I wanted to do. Cause it's like, it's the same concept. If you're going to buy a duplex, you might as well just buy a 20-plex or a 200 unit place. Because it's the same deal, but you're limiting yourself. So I don't want to just use it for my wedding or use it for my car or use it for major purchases. Ideally, you can literally, like, again, you could just you don't have to snap anything. Ideally, there would be an automated thing where you direct deposit your paycheck, direct deposits into the bank, which direct deposits into the policy, which direct withdraws the money that you need to pay off your credit card, and you get points here, dividends here, and leverage throughout the whole thing. And if it could happen in like the snap of a finger, that would be what I would want to create.
Ideal.
Yeah. Which I believe like we're going to. We just have to we gotta sell more so we can make more money, so that we can have a more attractive business, so we can go either have more profit or go raise money to go create the technology to do that, and then have buying power in the marketplace to be able to go to the carriers and the banks and create a connection between the two so that process can happen.